Hey, Puppy Trades! I wanted to do a video analysis update on an investment that I made on Wednesday. I think it's very cool that I get to actually show you guys what I'm purchasing, what I'm buying. Kind of a day in the life, right? Everyone wants to know what it's like to be a professional investor, what we do all day. Most of the time, I am planning my next buy. That's actually probably what I'm going to be doing right after this video is done being filmed. I love it. Some people don't like it. If you don't like planning your next buy, you probably should not be an investor. Just like people who don't like blood probably shouldn't be doctors. I was fortunate that I didn't make any of those mistakes. A lot of people make early on. They use leverage. They sell options outside of ETFs. They do all types of stuff, and they don't get that chance to really kind of learn. I've had a long time to learn, and it's gotten me to a very far place where I started studying options, long gamma strategies, delta neutral strategies. I was at a desk, an office job. I was banging my head on the table, man. I could not wait to get out of there. And we had a mild correction in the stock market, a very mild correction. And I just remember thinking, like, this can't be my plan. That every time the market corrects, I'm gonna have to, go to plan B. I need income. My landlord doesn't care about Datadog consolidating. They don't care about Bitcoin consolidating. I know a lot of you guys care about Bitcoin consolidating. I don't. I specifically, very vocally, do not care about Bitcoin consolidating for a few reasons. One, since its inception, well, I didn't even invest in this at its inception. I bought it at the bottom. But since its inception, in blindly investing in BITO has yielded a 47% annualized total return. Now, when you look at the BITO chart, that's going to surprise you because BITO is very far below its all time high. So you're going to look at the BITO chart and you're going to say, how has an investor in BITO made any money at all, blindly averaging in since its inception? And this is the power of dollar cost averaging. But even without dollar cost averaging, let's talk about this consolidation period. Why BTC only around since this consolidation period did not really participate in any upside activity whatsoever. But what's it doing? It's selling out of the money synthetic covered calls on Bitcoin, getting a 14% annualized return compared to no covered calls at all with BITO. What happens? We still get a higher return with BITO thanks to those dividends and thanks to Bitcoin's recent rally, and also thanks to the fact that YBTC did not have those extra 7 days. So let's make sure we have the exact same dates. 33 to 23. So a little closer, much higher yield. And again, that's mostly because BITO and Bitcoin has turned around recently. But anyway, let's get back to this presentation and talk about why I bought these high yielding ETFs on Wednesday. Oh, where was I going with that? Oh, it was that, a lot of people, they don't have a chance to learn, right? By the time they realize they don't like planning their next buy, they already invested too much. They already lost too much money. They went in on leverage. They sold options. They didn't sell options, but they invested way too much in a growth stock that had a high beta, had no value backing, and they got burned. And by the time they realized they didn't like planning their next buy, it was too late. There are people who they're really smart. They go to med school. They get to that final exam, and it's really they're 8 years into med school, and they see blood for the first time, and they say, "Oh crap! Oh crap!" It's not for everybody, is what I'm trying to say. It's definitely not investment advice for anyone. It's for your entertainment. It's for my personal notes. Why I bought these high yielding ETFs on Wednesday from a professional investor, but not a certified financial advisor. What I bought on Wednesday: 21.8% yield max short Tesla option income strategy ETF CRSH. 22.1% the curve Tesla synthetic out of the money covered call ETF TSLP, not Tesla, notably. 10.07% the yield max microstrategy synthetic out of the money covered call ETF MSTY. 10.2% yield max square synthetic out of the money covered call strategy ETF SQY. 14% spot Ethereum ETF ETHW. 21.8% pro shares synthetic out of the money covered call ETF. It uses EETH Ethereum futures, and that is YETH. So if we look at the weighted average expense ratio, I took the size of the position 21.8, so in this case 0.218. I multiplied it by the expense ratio, in this case 0.99. That's how this value for this weighted ETF for the expense ratio is calculated of 0.22. I added them all up together. We see the outlier was the spot Ethereum ETF, only a 0.2% expense ratio. So got the average expense ratio down to 0.77. That's nothing to sneeze at. It's significantly lower than 1, which is very good. And another thing about that is we're gonna talk about how many options are being sold, how much yield is being achieved, the total returns being achieved, and that's just in the brokerage account, let alone the freedom being achieved, going from a 0% yield basically with the S&P 500 to, some of these combinations are going to be in the 70s, some of them are going to be over 100% yield. So we're gonna get into this in for MSTY and Nvidia. Most likely for the rest of my life, my yield is actually going to be much higher than what is stated on the website because I'm in the money not just with dividends but from net asset value. I bought the dip in MSTY and NVDY before Nvidia and MicroStrategy rallied. So my yield on this MicroStrategy dividend is actually higher than 190%. My yield is actually over 200% for this most recent dividend because my average cost basis for MSTY is about 26-ish, and now it's around 27 to 28. 10.2% SQY, 14% ETHW, spot Ethereum on the blockchain, and now 21.8% pro shares out of the money synthetic covered call Ethereum ETF. So now this has a 94% yield forward. I can get a 94% yield blending YETH with ETHW. Of course, the ETHW position won't have a yield, so that's going to lower the average yield. But I can sell a lot of options on Ethereum, and that's while implied volatility, at the money implied volatility on Ethereum is very low. That can be found, you can research very easily. Ethereum's at the money implied volatility. I meant to include that, but Ethereum's at the money implied volatility is it a low trough? The reason that I mentioned that is because the yield, even though implied volatility is very low, is still 94% very high. So group one, no delta, no directional bias. This is pretty amazing. A lot of people don't realize this exists. This is very bond-like. Like this is a very bond-like position. This is almost like owning treasury bonds, except the total returns are much higher. Why is that? Because half CRSH and half TSLP, it can't lose because it's half short Tesla, it's half long Tesla, and on every single time frame, with the way these ETFs work, on every single time frame, you can read it and weep. I know a lot of people aren't happy about this, but you can read it and weep, and you can see that blindly averaging into CRSH, $60,000 loses about 7.5 bands. But when it's paired with TSLP, $60,000 makes 13 bands. So making 13 bands and losing 7.5 bands on a delta neutral position. There's no directional bias. I'm not picking a direction. That means that this can be scaled infinitely. This can be scaled infinitely. This can be scaled forever. I do not care how much money I invest in this because it doesn't matter. Because it can be scaled forever. Unless I get robbed by Curve, unless I get robbed by Yield Max, or unless the Options Clearing Corporation gets attacked by Iran or some ridiculous cyber scenario like that, I can scale this position forever. I can make it as big as I want. It doesn't matter. It is bond like. It's actually safer than bonds because it doesn't pick a direction. As long as Tesla exists and the options chain exists, it does not matter how much I invest in this. And that's kind of cool. That's kind of cool. I'm kind of a cool guy. TSLP is better than TSLY. We're going to look at these holdings. What they do, they buy the 275 call and they sell the 275 put. That gets them a delta of 100. They use that delta of 100. They sell an out of the money call on Tesla for 11.15, collect all that premium. We got a 25% yield paired with a 116% yield. So I can buy the CRSH 100%, 116% yield forever because I can offset all the downside risk with TSLP. And I did that this week. And the very first thing that happened was TSLP caught almost all of Tesla's gains after exploding, and CRSH got capped about 15% on the way down. So that was extremely, extremely cool. I love this position. It's a secret position, and it can only be taken on Tesla because Tesla is the only stock that has a curve ETF and a yield max short ETF so far. Doesn't exist for NVIDIA. So very, very cool. This is just showing what we just went over. Back testing equal weight TSLP and CRSH. 120K turns into $125,476 in 119 business days. That's a 10.6% annualized return and a 70% yield. Wow. The second buy was a MicroStrategy out of the money synthetic covered call ETF. Pre-existing positions include BITO from 10 to 140% return on Coinbase that was realized in a lump sum position on CONY where the dividends have already paid for itself, blindly averaging into MSTY since its inception, up, down, and side to side, 200% total return with a now 193% dividend yield. That's a little high because they switched to weekly recently, and MSTY was the very last week, but still, the point is there: 100% yield, 200% total annualized return. So people say big yield equals scam. This total annualized return is significantly higher than anything the S&P 500 has ever created. Past performance does not indicate future results, but correlation analysis can be very interesting, and it doesn't change anything. But we look now, Coinbase has a way to get delta neutral, Coinbase and fiat. So that's interesting because Coinbase is very correlated with things that are related to Bitcoin, like MicroStrategy. And we've seen MicroStrategy is correlated with Coinbase, but it's also been outperforming Coinbase by a lot. That means it's possible for the first time ever to do a pair trade, where a delta neutral position is taken on the laggard and a bias position is taken on the winner. So this is called a pair trade. Pair 1 is delta neutral, Coinbase. Pair 2 is long MicroStrategy MSTY. That's called a pair trade. The idea, very similar but not exactly to this, is that I can scale the position more because now I have downside exposure in theory to Coinbase and MicroStrategy. Ideally, they're going to be correlated. Ideally, Coinbase is going to keep underperforming MicroStrategy, and if they do, there's going to be a mean reversion. If they don't, there's going to be a mean reversion. The worst case scenario is that Coinbase is more spread out across the altcoins. It's more spread out across the crypto ecosystem, whereas MicroStrategy is not. It's very heavily into Bitcoin, has not cared about any of these other cryptocurrencies at all. So if the altcoins really start to smash Bitcoin, then this could kind of go haywire if I don't collect enough option premium until then. So that's something to note with this. But for the most part, they are going to be correlated. I am expecting MicroStrategy over time will keep outperforming Coinbase. I love this pair trade. I take it, and all three of the ETFs blended together, we see $40,000 loses about 4 grand with fiat. $40,000 makes about 3.5 grand with Coinbase. But then what also happens is that $40,000 makes $10,000 with MicroStrategy. The idea was I got to scale into MSTY and buy this giant dividend because I had downside exposure on Coinbase and fiat. So far, it's working out like a beautiful charm. Third buy, Square out of the money synthetic covered call ETF SQY. Very lovely. I made a whole video on this. I liked, and I bought PYPY for PayPal too. I talked about how I could blend Square Cash Commons with SQY, get a very nice yield. I like this ETF a lot. I think the yield is extremely high. The yield's over 100% right now. Blindly averaging into SQY since its inception is a 30% annualized total return. That's through a bull and bear period, but it did not participate in that crash. So that's kind of the perfect scenario, collecting all this sideways actions. A lot of people, they would have been on Finchwit. They would have only cared about Square Cash Commons. This made a 30% yield, even though we can see Square Cash has mostly gone sideways. Hasn't really been going up that much, but it's been selling so many out of the money synthetic covered calls. Still a 30% annualized total return. So that's SQY. Buy 4 was YETH and ETHW blended together, both brand new ETFs. YETH is the out of the money synthetic covered call ETF. What it does is it buys a call and it sells a put on EETH. That's a front month Ethereum futures ETF. And then it sells it. That's how it gets 100 delta. It buys a call at the money and then it sells a put at the money. That plus 50 call delta and the negative delta 50 for the put is a put plus 50. So 50 plus 50 is 100. They get that 100 delta and they sell an option against that 100 delta that is 7% out of the money. So they are still collecting upside potential. That's a very cool aspect. When I blend ETHW and YETH together, I get spot Ethereum on the blockchain, and I get these massive premiums from YETH. Right now, this ETF is yielding 94%. I expect, yes, that is going to be on the low end, and that's going to be the lowest the yield gets for this ETF. The at the money implied volatility for Ethereum is at a trough on multi-year time frames. I am expecting to the call side, we're going to see some skew to the upside when Ethereum gets to rallying, and especially for EETH having those front month futures, that's going to have a nice skew. We're going to see right now a 94% yield, and that's why at the money implied volatility is very low. So all these ETFs together, the yield was extremely high. Do you think it was worth that 0.77% expense ratio? Basically, for every $10,000 I invest, I'm going to get a $77 bill for all these ETFs. But how many dividends am I going to get? 116%, 70% average yield, over 150%, very high yields. I think it's worth that 0.77 expense ratio. Let me know in the comments if you don't.